Hi guys, welcome to Dwelling Solutions YouTube channel. Hope you guys are all well. My name is Preeti and today we're talking about the hottest topic which all of you have been asking about. Yes, capital gains tax. And what's that got to do with the Chancellor? Well, before we get into that, who are we? Well, we are a team of property experts and we are here to empower you in all property matters. So whether you're a homeowner, a landlord, a tenant, someone looking to buy a property for the first time, an investor, or just someone interested in properties, this channel is for you. So now, capital gains tax. Why is that the hottest topic? And why are so many of you ringing us and asking us questions about it? And what's that got to do with the Chancellor? Well, to find out, you have to watch the whole video to know. But before we start on that, let's do the basics. What is capital gains tax? In simple terms, capital gains tax is a tax that you pay when you sell an asset that you own and make a profit on. It has to have a value of £6,000. Now, that is what is referred to as chargeable asset. Of course, you don't actually pay capital gains tax on every asset you sell. For example, you don't pay it on a car your car, and you don't pay it on your main residential home. Thank God. Can you imagine if you had to? Anyway, going back to actual capital gains tax, when it comes to properties, slightly different. Properties, if you sell a property that is your second home, a business premises, land, or a property you inherited, if you sell that and you make a profit, you have to pay capital gains tax on it. Now, how is it actually calculated? Well, capital gains tax is 10% when you are a basic taxpayer and 20% if you're a higher taxpayer. But when it comes to properties, it's slightly different. It's 18% if you're a basic taxpayer and it's 28% if you're a higher taxpayer. Now, there is something known as annual exemption allowance, referred to as AEA. I like that, AEA. Anyway, sorry. That's basically there to allow you to claim against any capital gains tax you are due to pay. And that is at a value of 12,300. So you can take that off any profit you make. That is only if you sold the property this year. If you sold it last year, that was at £12,000. So that you can be utilized to take off against your capital gains tax. Also, you can take off any expenses you incurred. Now, how does that actually work in the calculations? Shall we do the maths? Let's do it together, shall we? Okay, so let's say you are a basic taxpayer and you've just sold a second home and that property you've sold for 220,000. But you bought that property for 120,000. So that's a clear 100,000 profit, right? Can you imagine if you had to pay your capital gains tax on that? It's a good thing we had the exemptions and all the costs that we can take off, right? So from that 100,000, you work out what your losses are. And what we refer to that is any expenditure you actually occurred while purchasing the property and selling the property. So what does that mean? You've got your 100,000 and off that you take off first when you bought your property. You would have paid stamp duty. On the stamp duty, let's say you paid £2,000. You would have also paid solicitor's fee. Let's say that's 1,500. Total amount of 3,500. That would be your loss when you purchased the property. So when you sold your property, you would have had similar expenses, right? So when you sold your property, you would have paid a solicitor's fee of £2,000. When you sold it, you would have used an agent, £2,000 fee on that. Total £4,000 when you sold your property. So you take your £4,000, you add it to 3,500. Your total losses that you have incurred when purchasing the property and selling the property is 7,500. So you take it away from your 100,000 profit, leaving you 92,500. That is now your profit. From there, you can take off any renovations you occurred in costs for that property. What I mean by that is not where you have, changed the light socket or where you've changed a light bulb. These are actual renovations, such as, double glazing or roof repair or total renovation. Let's say for this property, you had a cost of £10,000. So you take that off your 92,500, giving you 82,500. Now, from that, what do you take off? Yes, you take off the AEA. I love that, AEA. Anyway, you take off your AEA of 12,300, giving you a grand total of 70,200. That is your profit that you use for capital gains tax. How is that actually calculated? Well, because you're a basic taxpayer, you use your entire threshold. And what that means is the maximum on a basic taxpayer you can earn is 37,500. So you utilize that first of that amount. And what I mean by that is, have a look. So we take your 70,200 and we split that into two payments. The first part is for the basic taxpayer threshold. You take your 37,500 and you work out 18% of that. What that means is the remaining balance you pay at 28%. See the calculations. See that? So 18% is calculated at 37,500, which gives you a grand total of 6,750. Then you take the remaining balance of 32,700 and you work out 28% of that, giving you an amount of 9,156. You add those two figures together, giving you 15,906. That is your capital gains tax that you would pay when you sold a property at 220,000. Now, it's very important that if you are going to be claiming any renovation costs, that you keep a note of all your expenditures. Sometimes landlords actually forget that. They don't make notes of that. And people that are selling their properties, they forget that. It's really, really important. You keep your receipt and you make your notes. So now that we've gone through the calculations, it might be a good exercise for you to actually work out what are your chargeable assets that you may incur capital gains tax. And using that formula, hopefully you'll be able to work out what potentially you may pay on capital gains tax and use that to be smarter. Have a clear plan, be smart with your money and work out a plan. Don't just leave it to the last minute. Have a strategy. Now, that goes on to the big question. What's that got to do with the Chancellor? Well, the UK faces the cost of COVID-19 pandemic, which is estimated over £190 billion. The government is looking at how it can increase revenue by recuperating the cost that it's actually lost. And yes, one of the areas it's looking at is capital gains tax. So what does that actually mean? Well, you see, capital gains tax, out of all the taxes that we pay in the UK, is one that is at the lowest rate. So what I mean by that is, if we look income tax, for example, income tax right now we pay at a basic taxpayer is 20%. Then for a higher taxpayer it goes to 40%, then 45%. With capital gains tax, it starts at 18% for basic taxpayers, but only goes up to 28% for higher taxpayer. Can you see the difference? 28, 45, there's a difference there. That's what the government is doing. It's actually looking at where it can increase the revenue. So, what's that got to do with the Chancellor? Well, Rishi Sunak, our Chancellor, made a desire to the Office of Tax Simplification to have a look at capital gains tax to simplify the system. As a result, in November, it was revealed that the Office of Tax Simplification issued a report to the Chancellor explaining that the government could raise, guess what, £14 billion if it reduced the annual exemption allowance for capital gains tax, which is at 12,300 right the way down to £2,000. Not only that, they've also suggested that we should, or they should, double the actual rate that is charged on capital gains tax from 18 to 28%, to lining it up as close as possible to income tax rate 20, 40 and 45%. That's a huge cost that is going to be incurred to landlords and property investors that have large portfolios of properties, especially if these increases of the rates go up and the exemption comes down. You'd have to be paying a heck of a lot of money on capital gains tax. Well, what did the actual Treasury say back to everybody regarding this report? Let me read it to you. They stated, the government's priority right now is to support jobs and the economy. We thank the Office of Tax Simplification for the independent report and we'll look into it and consider it in due course. Well guys, there you have it. That's what's going on with capital gains tax. Obviously, it is under review right now, and yes, it is scary times. That's why a whole load of you are now starting to ring us, trying to find out what's going on. So we will be doing another video regarding this if you guys want, but we will keep you posted for any information we hear. So don't forget to subscribe and hit the notification button so that at least you know when we've sent out a video. Hope this video has been helpful to you. If you like it, click the thumbs up. I love doing that. Click the thumbs up. Leave us a comment if you are worried about this and concerned. Get in touch with us. We're here to assist you. We're here to help. But until then, until our next video, look after yourself, keep safe, and don't forget, moving with us is the best solution. Take care.